Now these days throughout the market, there are so many high quality covered call style ETFs that can offer dividend or income focused investors like myself a lot more income ASAP compared to other investments such as simple index funds across the market. Now, even though this is awesome, it's sort of a problem because it makes it sort of hard to know which ones are best and which ones are worth investing into. So in this video, I'm going to make it very simple, and I'm going to go through 6 of my all-time favorite covered call style ETFs that all offer a ton of income potential from day one, have not decayed as far as NAV goes, and also have a positive total return, at least as of so far. Now, these are my 6 favorite across the entire market, and I promise you're going to like them as well. So make sure to stick around, drop a like down below, and let's get into the first covered call style ETF. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first covered call style ETF that I think is definitely worth looking into and is personally in my portfolio one of my new favorites is ticker symbol GPIQ, or the Goldman Sachs NASDAQ 100 Core Premium Income ETF. Now, before we go through this first one, I did want to also say that a lot of these different covered call style ETFs are going to have a lot of things in common. They're mostly going to track the S&P 500, or in this case, the NASDAQ 100, and then utilize a specific covered call strategy along with other things. So I'm not necessarily saying that it's necessary to invest in all of these or some of these. I'm just saying that for me personally, I like these 6 the most across the entire market when it comes to covered calls. But to get back into GPIQ, the Goldman Sachs NASDAQ 100 Core Premium Income ETF, this ETF tracks the NASDAQ, but along with it dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative or flat markets. Now, what I like a lot about these new Goldman Sachs covered call style ETFs, because we are going to be talking about another one here in a second, I like the fact that they do dynamically sell covered calls, which can allow some capture for upside, but along with it, if the market's trading sideways or even down, investors are going to have exposure to a ton of income ASAP. Not to mention, at least so far, GPIQ, this ETF is up around 23+%, not even including dividends. And on top of that, the dividends have been pretty big. We're talking 41 cents, more or less 38 cents, something around that range every single month since inception. So it doesn't really get much better than an ETF that's been going up in price, but along with that, been paying investors a ton of income from inception. This ETF, for example, has given investors an annualized gain of around 37% plus if they were to reinvest their dividends along the way. But speaking of the Goldman Sachs covered call ETFs, I am also a huge fan of GPIX. This is basically the same thing as the last one, only this one tracks the S&P 500. So if you want more exposure to S&P, maybe go with this one. If you want more exposure to NASDAQ, maybe go with the other one. Or like me personally, I'm choosing to go roughly half and half. Now, this ETF, just like the other one, also provides equity exposure to the S&P 500. The other one, of course, is the NASDAQ. But just like the other one, they both dynamically sell call options, once again allowing for upside, but also generating a ton of income consistently every single month. Now, this ETF in the max time frame is also up significantly, up 25.25%. And again, this is only since October of last year. The dividends for this one have also been massive. We're talking 34 cents, 32 cents, anywhere in that range, which is giving either one of these ETFs a significant yield. We're talking 6, 7, 8, 9, 10%. Now, just like GPIQ, GPIX also has a nice positive total return. We're talking around 37%, which is very, very good so far. But moving right along, another one of my favorite covered call style ETFs, really high quality one here. You guys have heard of it. You probably already have it. JPM, I'm talking about the JPMorgan Equity Premium Income ETF. Again, this ETF specifically tracks the S&P 500 and writes out of the money S&P 500 index call options that generate distributable monthly income. Now, like I said, all these ETFs are going to have a similar strategy. We're talking about covered call style ETFs. But again, the way they sell covered calls, if they're going to be out of the money, at the money, far out of the money, etc., that's what's going to differ a little bit more or less. Now, even though JPY hasn't been the best investment that I've ever bought across my entire portfolio, I personally have held on to JPY for several years now, and I really can't complain. I mean, it's up around 18.6% in the max time frame, and JPY's been paying anywhere from a 7, 8, 9, 10, 12% yield since I started buying it. Now, the thing with the JPMorgan covered calls is that you are going to get more or less a different amount of payout every single month. Some months might be huge if there's massive volatility and option premiums are high, and some months might be tiny. So that's definitely something to consider. The fund managers for the JPMorgan covered call style ETFs are not necessarily seeking to pay out the same amount every month. But regardless, like I said, JPY's done pretty well over time. It has a trailing 12-month dividend yield of around 7%, so not the highest, not the lowest. But as far as covered call ETFs go, JPY is more or less sort of the gold standard. Not to mention over time, JPMorgan has offered around 73% total return, and this is with dividends reinvested, or around 61% with dividends not being reinvested, or an average annual total return of around 13 or 12% per year. So again, not the best investment across the entire market by any means, but not bad whatsoever. And even though I'm not the biggest fan of JPMorgan, I still hold a ton of it, and I will probably keep holding it for a while. Now, this JPMorgan covered call style ETF is one of my favorites. I'm talking about JPQ. This is one of the most popular ones across the community. JPQ has been very popular because the fact that it does offer a massive dividend yield, at least trailing 12 months. But on top of that, JPQ has also grown a lot over time in a relatively short time frame. Now, JPQ is just like JPY, but the only difference is, once again, this one tracks the NASDAQ. And even though on the max time frame, JPQ is only up 11.3%, a lot of investors that bought in the low 40s are up significantly higher than that. Now, JPQ does offer a ton of income. Just as of last month or so, there's a 56-cent payout, then a 43-cent payout. It's more or less an 8, 9, 10% yield. And this is even if we were to average out some of the lower months. All in all, JPQ is a sort of sleep well at night cover call style ETF. The management is very high quality and definitely has gotten more popular over the last few years. Not to mention JPQ's total return over time. We're talking 13.8% on average per year, or if dividends were not reinvested, around 11.4%. Either way, once again, a total return, high quality, good strategy covered call style ETF, definitely worth looking into. Now, for the last few covered call style ETFs, these ones are both relatively new also, but these are some of my favorites as of recently. I'm talking about QQQI, the NEOS NASDAQ 100 High Income ETF. And this ETF, again, although it has certain things that are like JPMorgan and even the Goldman Sachs ones, it does offer some things that are a little bit different. And if you're, of course, looking to do an absolute deep dive into any one of these covered call style ETFs, definitely subscribe to my channel because this is more or less all I talk about here. But this ETF, once again, has a similar strategy. It invests into the constituents of the NASDAQ 100 and then utilizes a data-driven dynamic cover call strategy. Now, also what's cool about these NEOS funds is that they do have the potential to be very, very tax efficient. And on top of that, sometimes these NEOS ETFs like QQQI also buy calls, not only sell them. Now, this ETF is relatively new. It's only up around 2.14%, but keep in mind the distribution rate for QQQI is around 14 or 15%. So you are getting some massive yield, and that's even if the price of the ETF doesn't move up in price. You're still earning a ton of income, or at least I'm talking historically. And to prove it to you, if we look at the total return for this ETF, so far we're talking around 13% total return with dividends reinvested, or around 20% annualized, and we're more or less very close even if investors were to spend the dividends along the way. But now to get to the very last covered call style ETF that I think is one of my favorites / worth looking into. This is another NEOS ETF. This is SPYI, the NEOS S&P 500 High Income ETF. This is very similar to that of QQQI, only this one, you guessed it, tracks the S&P. So basically has the same exact target benefits, the same exact strategy as the last one. It tries to be tax efficient. They often sell, but even sometimes buy index options, which could of course help with upside potential. Now with SPYI, it's only up around 5.1% as of right now, but again, keep in mind the trailing 12-month dividend yield for this one is around 12%. So even if this ETF trades more or less sideways over the years and pays me anywhere from 49 to 51 cents or more on a monthly basis, I'm very happy to earn around a 12 or 14% yield, especially if it's tax efficient, and go along my merry way. Not to mention SPYI, although it's only been trading for around 2.08 years, it's already offered a total return of almost 30% with dividends reinvested, around 25% with dividends not being reinvested. Either way, once again, more or less a home run when it comes to the higher yielding cover call style ETFs that's offered investors a positive total return, a ton of cash flow, and not a negative decaying NAV. So I hope that was somewhat useful for you guys to see an inside look at 6 of my favorite covered call style ETFs across the market as of right now, and all 6 of those ETFs are either in my portfolio / I've been buying them a lot as of recently. Now, even though I'm a huge fan of all those, I definitely have some of my favorites even within that 6, and now from you guys down below in the comments, I want to hear from you. If you were to only be able to choose one of the ETFs we talked about in this video, buy it and hold on to it forever, which one would it be and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.